for this panel. Love Denver, love everything about the ecosystem, see great parallels with what's happening in my backyard in Salt Lake City. Always here looking for, kind of our next opportunity to invest and partner with quality entrepreneurs. And, several of our team members are from Denver. We have great roots here. So, yeah.
Good evening. My name is Elizabeth Salomon. I'm the CFO at Cherwell Software. Cherwell provides IT services. It's an enterprise IT service management software platform. A lot of our customers, 2/3 of our customers, use our platform outside of IT, so it's a great growth, very strategic for companies. Our company is based in Colorado Springs. It was founded there. We have offices here in Denver, as well as Seattle, Tampa, and in the UK, and now Australia. So been here about 2.5 years. We are owned, interesting situation. We have an investment from Inside Venture Partners that invested in Cherwell in 2012. We have a group of founders that still have a significant investment, and most recently in February of this year, received a $50 million investment from KKR. So very interesting dynamic with the varying investor groups and agendas.
Great, thanks. I'm going to start off with a curveball, guys. It's not on the listed questions that I sent. And it's something that came up in Alan's talk, but hey, can't look at that. Alan, you mentioned the word bubble in your presentation. So for all of you, you think we're in a bubble right now? And if so, how would you define it? If not, why do you think it's not a bubble? Anyone can start.
I said it, so yes. So yes, I do think we're in a above market. Bubble's a tough term because it comes with negative consequences to the last few bubbles we've been in. I think we are in an above average market for companies. I do think we are in a world where things will continue to be good for this segment, better than other segments, but I do think we are an above average segment.
I'll just add to that. There's very few times, I think, in any of our lifetimes where there's been a confluence of kind of business-friendly factors like we're in now that have led to some pretty significant valuations. Interest rates, as low as they can possibly go. Private equity, the highest it's ever been. A lot of dry powder in private equity. Very low interest rates, stock market at all-time highs. You don't really typically, and that's truly across the globe. So you rarely see a confluence of those factors that will ultimately lead to higher valuations. So, and we're very much long in the tooth in this cycle. So I think everybody has always kind of got an eye out on when the curve is going to bend the other way. Because we certainly, the party doesn't last forever.
I'm happy to add a couple of things. I think that's exactly right. We share the same sentiment. I think if you look at the amount of capital that's been pumped into the economy over the last, say, 10 years, and still continues to be pumped into the economy, keep in mind we're not in a contracting cycle right now from a monetary policy perspective, so it is still an easy money environment. That means more liquidity is coming on the market, not less. The capital overhang in private equity is very real, and that does have the direct impact of sort of floating valuations to some degree. So I agree. I think we are in a quote unquote bubble. It's a difficult term because I don't think it should have the negative connotation either. My guess is just given the amount of liquidity that is out there, if things need to correct, it's probably more likely to be some kind of a soft, tread water type of environment where businesses grow into the valuations that they've already received or something along those lines, as opposed to something that contracts in the same way that it did in the past. One of the interesting things in the chart, and I don't know if anybody else caught this, that Alan showed earlier with the two pyramids, kind of the revenue and enterprise value pyramids, and showed the relative balance of, I think it was small business up to enterprise or whatever it was. If you look at the multiple, the implied multiple dividing the enterprise values into the revenue, left side of his charts to the right side of his charts, Gartner, who is only right 50% of the time or so, actually expects those valuations to increase between now and 2020 because the implied multiple there is much higher. So I don't know if that's something that we should be looking at. I don't know how much higher it can theoretically go, but look, yeah, we're in a bubble.
Yeah, probably nothing to add substantively to you guys, especially this is what you're living every day. I just know making sure it really, for me, it's focused on just the execution in the business, all the right drivers, making sure we're delivering where we need to, and then hopefully the right valuation, plays out for us.
Great. So Alan said a lot of nice things about Colorado and highlighted a lot of the good things and why he's invested here. I'd like to ask Elizabeth and Mark, from an operating perspective, how do you view operating here in Colorado? What are not only the positives, maybe some of them that Alan mentions that you want to reiterate, but what are some of the challenges that you're seeing in your business and operating here?
I'll start. Interesting dynamic having our company founded in Colorado Springs. Actually, our whole industry, IT service management, was founded in Colorado Springs, some predecessor companies. And so it does create a different type of talent pool than you have up in Denver and some other cities. We also have offices in Seattle and some other key areas where we draw talent. But I think as we've grown really fast over the last 10 years. We've started to outgrow some of the talent pool in certain areas in Colorado Springs. And so we opened a Denver office in 2015, really with that in mind, knowing that for certain talent, we would need a presence here. I think the market here for talent is pretty good, although it's getting competitive, all the Vista companies coming in and hiring everybody. So I got to compete with them. For me, it's played out in Cherwell, where we've hired some key talent. I think some of the downside, I think, a lot of people, as you know, and I'm one of them, moved to Denver it's a great place to live. People love the things that people love to do. I have a couple people on my team that just quit jobs in other cities and wanted to move to Denver and be in Denver and live the lifestyle and outdoors. So I've been a beneficiary of that. I think we've had some challenge recruiting certain C-level talent. Having to, certainly the type of business we are looking for, that Silicon Valley C-level talent has been a little bit more of a challenge, particularly Colorado Springs. I think Denver is a little bit easier, but.
So I'll echo a lot of what Elizabeth said. So for me as an operator, access to talent is, the primary factor the lever I can pull for success. I've had the benefit of hiring around the world. So I've only been in Denver for 9 months. Prior, I ran companies in Boston, in Europe, had facilities in Atlanta, in Silicon Valley, in various parts of the US. So I have a relatively good perspective of the Denver labor market in comparison to some others, including abroad like India. Denver is an interesting one, and it very much echoes what you had said, which is the mix of talent is a little bit different than I've seen in other, high-profile cities. So it's attracted a lot of youth, and so kind of in the entry level to mid-level talent, it's extraordinary. It's very good. Skills are very high. The talent pool is actually pretty deep and rich, not nearly as competitive or as costly as some of the coastal cities. So we've actually found pulling from that talent pool, I wouldn't say easy because this market is not anywhere easy across the globe, but on a relative basis, kind of the cost value equation, and particularly the entry level and mid level, has been very, very good in Denver. We've had the same challenge kind of at the upper levels, at the C-level suite. We'll talk a little bit about this probably later, but the lack of a lot of history in Denver of creating larger companies, going from smaller venture cap companies to mid-market companies to public companies and other, because we haven't had that trajectory in any material way in Denver. We lack a lot of the kind of experienced executives that you might in the coastal cities, and I think, Alan, you had said it earlier, so attracting coastal city executives to Denver can be tough in comparison, because they say that's great, but should I need to find my next gig, in Silicon Valley, you can throw a stone and hit 20 new opportunities. Similarly in Boston and Denver and in Texas and Austin and other places, that's a bit of a hesitation for executives.
Totally agree. You've seen that a lot in our portfolio. I do have to say that when I first moved here from Silicon Valley in 2002, trying to recruit the executive from there or anywhere to here was close to impossible. I'd have to bring the secret weapon in, my wife, to dinner to help recruit him out here. And they say, "What's my next gig?" And I'd have to stare him in the eyes and say, "I swear I will help you find your next gig." Now, when that happens, I say, "Well, let me introduce you to Mark, who's now on his third gig in Colorado 10 years later." And there's more real data, I think, out there, so which is good. You mentioned something, Mark, about, and Alan, you said this in your presentation, you used the shows our age. You talked about HP. You didn't say Amazon or Facebook, which is cool. I love that. But yeah, and Mark, you mentioned we haven't had the big success here. It's like, oh, JD Edwards, what? What was that? So would you, anybody can comment on this. Do we need that for this to become a breakout market? Or can we have, 10 pings that are $2 to $5 billion market caps, and that does the same thing? What do you guys think?
Yeah, I'll take it. Happy to. Yeah. Yeah, I mean, Utah benefited from a few very brand name successes very early on in that ecosystem from Novell, WordPerfect, a handful of long-term names, and then if you look at more recently, seeing things like Omniture turn into what is now Adobe, and one of the largest arms of Adobe. So there are a number of those kinds of successes, but none of those, I don't think. Well, I should back up. I think, to your point, can you do it in other ways? Absolutely. There's no question that you can. I think, if you had a couple of the 2 to 6, and I don't even know that you necessarily need that. More important to me is what happens to that capital when those realizations happen. So whether it's a whole bunch of $300, $400, $500 million exits or opportunity liquidations or realizations, or whether it's a couple of the 2 to 6 billion, whatever that means, the most important thing is that capital gets redeployed here, that the entrepreneurs that were here, that built the businesses here, stay here and do it again. And that is one thing we see in Utah. It's one thing you see in Silicon Valley. That capital tends to kind of stay and continue to grow. So I guess in short answer, yes. I'm trying to be long-winded, but not much more to say about it.
I'll just add one thing. So coming from Boston, it's an interesting kind of counterpoint. Boston is actually doing a study on how they lost the private equity market. If you look, 20 years ago, Silicon Valley and Boston were kind of, neck and neck. They were competing for deals. They largely had, year on year, similar deal counts. Fast forward 20 years later, Silicon Valley's outdoing Boston by, 3 or or 5 to 1. And what happened in Boston is this pillar company concept, right? So the pillar companies in Boston, like Lotus, Compaq, and some of the others, got acquired by IBM and others. And the pillar companies left, right? So there was not this reinvestment of capital. There was not this mentorship. There wasn't, new entrepreneurs being born. There were not new venture capitalists being born. And so Boston is actually this interesting study where Denver, I think, actually not become a Boston. The Boston disease, I think, is relative to Boston. I think the way Denver actually avoids the Boston disease is companies like Vista. This is not a shameless promotion, but the idea is because the IPO market is gone, right, which tends to create these self-sustaining companies that grow over time and create new entrepreneurs and new capital. That market is largely dried up. Private equity has come in to fill the gap, right? And what's interesting about Denver is Granicus is a great example. Granicus was originally a Silicon Valley company. It was born in San Francisco. Not Vista, but a prior private equity company said, well, we have an opportunity to actually take it out of a cost structure of Silicon Valley and move it to Denver. Where other companies are moving to Denver that were born other places, but by using private equity, they can actually grow up and create the same kind of self-fulfilling momentum of a community without having to go IPO. So Denver can become that because it's become this nice offshoot of other more expensive coastal cities to build companies.
That's well covered.
Cool. That brings up, I want to follow up with Alan. You mentioned, I think there's a great phenomenon of companies being literally moved here. I think that's awesome, obviously, since I live here and invest here. You mentioned an example where they looked at 5 cities. Can you talk a little bit more about, that analysis and why Colorado won in that analysis of the other 5 places? And then do you think that's going to happen more in your portfolio going forward?
So I'll answer the second part first. So yes, and I think it's largely a view of, every one of our companies is in a crazy competitive environment. If they have a good idea in a big market, they are not alone, right? And so their view is, how do I become more competitive? I think traditionally we viewed it as, if we can keep product management next to development, next to customer support domestically, we are going to be faster with our innovation, particularly for vertical market companies, than if we very early say we can get a labor arbitrage trotting the globe to Eastern Europe or India or Philippines or China or whatnot. And so in the earlier days, we invested in a whole slew of companies in California, and one by one, they all said, we cannot build we're getting to be a bigger business. We cannot do it here sustainably because we're not the new thing. We're a good company. We've got great opportunity, but we're not Facebook. And then Facebook's not cool. We're not Google. Okay, Google's not. It's a constant treadmill of what's cool. And I do put that in like semi air quotes because I think that's a silly concept for long-term value creation. But we looked at it and said, great, well, let's think about what we do. And it was probably 15 years ago, we helped our first company make a geographic switch, right? And the answer was, you would do a study, and the answer wasn't, we moved a bunch to Texas, but it wasn't, hey, Texas wins. It was not California was the first thing that came up. You're like, anything but here. And we all lived there at the time. So we were like, okay, this is interesting. And eventually we did it to ourselves, and I moved to Texas. And we started going through that analysis, and we looked at a combination of factors, which is, okay, we want to hire 300 people over the next bit. We are tired of a 30% turnover rate. We've got a labor cost issue that is of concern. Real estate, availability, much less the pricing on it and the lack of flexibility. All of these things became a concern, and every company picked somewhere else. And so the attractiveness of Texas, which is where we've probably moved the most of our companies, and coincidentally, it was, for the same reasons, part of the reason why we went there was, super government friendly in terms of pro-business, right? It is, zero income tax, right? That's probably why we're there. And an environment for business that was conducive to growing companies, right? And so that was kind of what I would almost call it, the community and government receptivity to doing it. And then we do the work on top of that, right? Which says, okay, how big's the MSA? How many people are we trying to hire? Where are going to be, are there target companies we can hire mid-level and senior folks from? And then do we have, frankly, is there a good research university nearby to produce technical talent every year that we can tap into, or the spouses of graduate students that are coming in every year? And if you have that and it's a big enough MSA, well, I can move a software company anywhere, right? And so there's some tier, and I'm going to, again, tiering is not a derogatory comment, but St. Louis, we've got some great dev centers and customer service centers in St. Louis, right? It's not in the same group as a Denver or a Seattle or an Austin, but there's great talent coming out of good universities there every year, and our turnover is crazy low. We moved a company sum total to Gainesville. Try to recruit an executive to Gainesville can be tough. Now, getting them to leave is also equally tough, because they get there and like, this is awesome. My house is like 11 times the size for a third the money. And, sum total was not a cool company, but in Gainesville, it was the coolest employer, because it was like the one fast growing technology company in the whole town. So he's like, this is great. Silicon Valley, everyone hated us. Now here we're like rock stars. And so then we go through a process to evaluate, and it's, the first thing we do is always want to do, how big's the MSA? Is it big enough to support the hiring we want, right? 2, is there a good education base to kind of funnel folks into it? 3, are we going to be able to recruit outside executives into the town, and to what degree, if they don't exist there already? And then from there, it's a pretty simple math exercise on cost of living and real estate. Long answer to your short question.
So, Alan, you talked a little bit about the positives and the reasons why to look at private equity versus an IPO. I'd like to expand on it a little bit, and maybe start with you, Matt, and then we can talk about the operating side of raising private equity. Maybe broaden it beyond IPO, because there's other ways to fund your business. One, with your customer, and like never take money, get acquired by a strategic, et cetera. Yeah, ICO. Those are becoming popular. So maybe starting with you, Matt, expand on it, not just versus the IPO, but other reasons, why benefits of raising private equity versus other paths.
Yeah, I think it's a good question. I think there's probably 25 different value creation paths that we could talk about, most of which don't include having the bloated cost structure of an IPO, so we can bench that one. I think Alan covered it very well. Other places to raise money, of course, are you looking for something like a comparison to debt capital markets, or
you like I said, not raising money, or selling to a strategic, right? Yeah,
in the random instance that you happen to be profitable, which in this market is not inconsequential. There's nothing wrong with building a great business and building it on your own back, on your own cash flow. I think there are value propositions to having a partner. some of them Alan has covered, like helping look at places where you can expand geographically. That's something that sometimes takes a different skill set, or at least a different perspective from somebody that's seen it and done it before. Capital markets, broadly speaking, are all awash with cash, and so I think if you haven't seen it yet, and it's probably just because we haven't focused on it as much, there's a very vibrant and healthy M&A market, so you can always team up and either acquire or be acquired into a sort of a broader portfolio play, a broader strategic play. I'm struggling a little bit with where else to take that, but I think that the set of opportunities out there is effectively infinite, and IPO is one very small path. So.
Elizabeth and Mark, from the operating side, you've taken private equity. What's been the benefit and the pluses and contributions? And obviously, Mark got nice things to say about Alan, I'm sure.
Yeah, of course. No, Cherwell, we were very fortunate. We've been, over the last, I guess, really for 2 years, we were getting calls. We weren't out looking for money, and money was looking for us. And I told our chairman, I said, "You're like the hot girl at the party right now. Everybody wants to take you out." But it allowed us to be selective. We wanted a partner that would take us further. We already had Insight Venture Partners, who's been a great partner for us since earlier days. But we knew that there were some things we could do with additional funding to help accelerate our growth and innovate. And so we were very fortunate we could be selective. And I think, and we were fortunate to get KKR on board back in February. And since they've been on board, very helpful. Some of the things, Alan, you talked about, what Vista does with companies, they can see things across their portfolio. We have a great network with their portfolio companies now. How can we get better at disciplines around, say, pricing and other kind of data and metrics, and making sure that we're optimizing our existing customer base. So all those things that they're helping us with. So it's been a great partnership. And then, having some funds to use strategically certainly helps as well.
This may be career limiting, but I have a little bit of counterpoint. If anybody in this room should ultimately get to the beneficial place where you're deciding whether you do an IPO or private equity or something else, this is a bit of a different perspective, but I'd love to see a little more balance in the capital markets. I'd like to see some more IPO exits, candidly. I'm tired of seeing everybody getting picked up by Oracle or Salesforce. I mean, it's just, that's all there seems to be. It's like everybody's like, oh, my exit strategy is Oracle, my exit strategy is Salesforce. It doesn't produce the kind of companies, in my view, that ultimately we want as communities. And again, we talked about these pillar companies in communities. Once you get taken out by Oracle, you're an Oracle company and you run out of San Francisco, right? So, and again, private equity is a wonderful place to, get capital at the right valuations with the right partners along the way. But ultimately, that company gets to a certain size where you have to either get out through a strategic or an IPO. I'd love to see some more balance between IPO and strategics.
I agree. That was career limiting. No, I'm kidding.
Yeah.
No, all kidding aside, I think he's right. I think if we could build some other giant, big, successful companies that are big enough to warrant being public, that's a great outcome, right? So that's why I'm excited. It's great.
One thing I'd add, I don't think it's been said, I'm on the lower end on the venture side, but I think that one of the awesome, cool things about private equity, even in the buyout realm, is that you can still run your business. So when I'm comparing it to like a strategic acquisition, a lot of people, oh, well, I can get more money for my company from a strategic. Not always the case nowadays. But plus, you can still, a lot of times, what'd you say, 50, 60% of your CEOs, like Andre, stay on and run the thing. So you get, and we have several friends I know that are on like their 4th private equity buyout. The first one they sold the company at 30, then they sold it again at 35 to a new partner, then at 40 and 45. They've got to grow the company, and by the way, financially made a lot more money all the way through all those cycles, which I think is a really cool thing about doing private equity buyout for the founders and CEOs and entrepreneurs out there. We still haven't really got anybody to say much negative about Colorado, but obviously, Alan, you and Matt look at deals all over the country. Elizabeth and Mark, you both have run companies and been at companies all over different places of the U.S. But so, there is some bad stuff. I'll throw a few of them out there. I used to try to go to Sand Hill Road in like 03 to 05 and try to get my other friends to put later stage capital in mine. And they say, you guys are skiers and bikers and work-life balance bullshit, and now we got the pot thing to deal with. So, let's talk about what are some of the outside looking in things that people look at Colorado and say, yeah, you're not quite there yet, or you need to improve on that.
Besides no dispensary at the airport, or is that? Yeah, sorry.
That's federal land. No.
There's the reason that we don't talk a lot about bad things about Colorado is because there are relatively few bad things about Colorado. It's hard to find, reasons why it doesn't make sense to invest here. And I think the concept of, work-life balance, and even if it includes a little bit of recreational, partaking, I think, look, I think these things are all sort of past the stigma that might have existed 5 or 6 years ago. Some of the best businesses that I've been a part of all work very, very hard, and then all celebrate the fact that you go home at a reasonable time. You spend time with families, you do hobbies, whatever it is, and that makes you a more fulfilled person, a more fulfilled entrepreneur, I think. So the concept that, the work-life balance thing is, has a halo effect for Colorado, doesn't resonate for me. Never really has. One thing, I don't know how to find things that are bad to say, but one thing that Alan mentioned earlier is, when you get those exits to be a little bit more scale and then hold on to them and keep going a little bit and build that business a little bit further. If there's a dig I can find, maybe it's that. Maybe it's that, more often than not, we see folks that have a nice business, they build a nice business, and then they look for that exit. And that's good. That's okay, right? We want a lot of that too. But we need a few to kind of say, look, I'm going to turn down the $3, $5, $10 million types of offers, or even $20s and $50 million offers. And I'm going to roll the dice. I'm going to stick this thing out. I think the opportunity here is big enough. I can't think of a fantastic example, but there was a gentleman earlier that was presenting about the blood industry. Is he still here? Right? Healthcare. So you showed, for example, and I'm not picking on you, so be careful here. I don't know the unit economics of your business, but you show a business model as a $3 billion domestic TAM, right? And the goal on your slide, or at least the forward thought on valuation, was $65 million. And I say, if you have a $3 billion opportunity, let's go after that, right? Let's think about that in like another stage of growth. Now, maybe there's a transaction that happens at 65, and you decide with maybe Alan or someone like that you want to sell, a big piece of the business. Great. But let's think about what the next order of value creation is. And if there's one thing I can say is I don't hear a lot of that when I come to Colorado. There you go. I found something to give you. Anybody?
I'll stick my neck out a little more. Having you've been in companies on some of the coasts and other, I'll say that I think Denver has room to grow around gender and ethnic diversity. So I've found that the pool here tends to look like this room, candidly. So I think, and I don't know how to improve that, but, certainly in my sector and government sector, our customers really value having gender and ethnic diversity in our company and represented in our products. So I don't actually know how to promote that. The university system certainly is helpful there. Actually, I looked at one of the cool things I saw, Galvanize, the company Galvanize here in Denver. They had scholarships as an example. For folks that are trying to transition their skills into the high-tech community, but couldn't offer them to international or other type of students. So they kind of had to be Denver natives. But that was one example. I'm like, okay, well, if there's a way that, Denver or Colorado could, do more to help promote basically, immigration essence into Denver, I think there would be a positive benefit for the community.
I totally agree with that. The smart people, when they're doing diligence with me and deciding on whether to move here or not, those executives, pin me down and are smart and say, you've got to tell me 3 negative things about Colorado. Because of course I always talk about the great stuff. And the 3 things I always mention is, if you don't like people visiting you, don't move here, because a lot of people will visit you. Second, the wind blows way too fucking hard here. There's too much wind here. And third, it's too white bread. So I agree with Mark. That's a good Let's see. Last area before we open it up to the group. I think here it's getting late. Probably start with you, Alan, because you have probably most of the data, and maybe you've got some globally too, Matt. But the 25,000 companies in the database. When you look at Colorado, and as you've tracked it over the last 10 years, call it, are there certain trends and like what would I say, themes or sectors that you think are real core competencies here that are growing, that you think are going to kind of we're going to be the strongest at against those other tier 2 and tier 3 markets going forward?
I think that's a good question, and I would say I haven't seen it. Now, I will say there's some markets that actually do develop around those core pillars, and they say, New York, we're going to be fintech, and we're going to be, ad tech, and we're going to be awesome at it, and then it becomes self-fulfilling. And I think there's been a concerted effort to do that in that market, right? And I think it's been to their benefit. I would say we see a general, smattering of opportunity here across almost all segments that we look at, right? So I haven't seen one emerge, and one may be emerging, and I'm just not aware of it. But I do think that would be a great thing to occur, because I do think there's huge synergy and idea and thought by a bunch of companies in a broader, kind of a loosely coupled ecosystem, feeding and competing in a way for something better for the universe, Colorado universe.
Yeah, I don't know that I have a great, perfect bright line trend that I can draw. If I had to call something out, I'd say I see a disproportionate number of maybe infrastructure businesses here, at least in the stage that we tend to look at. I think we also see enterprise software as being big. In any case, again, not to keep pirating Alan's presentation from earlier today, but one of the topics that he brought up, or one of the data points that he mentioned that we didn't spend a lot of time on, and I actually think it's blown over way too often in these kinds of conversations, is the fact that only 12% of all software is hosted today, or 10% or something like that. I mean, that number is insane. If you think about the trillions of dollars of market cap that exist in software broadly, you don't have to have a perfect, well-developed ecosystem. I agree with Alan. It would actually be really nice to have. It tends to self-fulfill, and then the splinters from that can also become kind of self-fulfilling. But today, if I had to pick one, maybe enterprise software and maybe with a little bit of a focus on infrastructure. I don't know if that's worth anything, given how soft the answer is.
Any thoughts you guys see being here locally at all on that front?
No, I just know when deciding to come here for this opportunity with Cherwell, I mean, I did my research on the city, the market, the economy, and it's certainly has diversified over the last few years and the growth. So I didn't really see a trend in my research, kind of consistent with what you did. But what was appealing to me was the diversity and the growth and kind of what we were starting to see around the region. So it was a big factor in me deciding to come here.
Great. Dave or Peter, should we open it up to audience questions?
So yeah, the easiest way to do that is it's a hard thing to do, right? So the way to think about it is what we've done over 17 years is work with literally like several hundred companies and just pay attention, right? What's working? What can we do better? Let's make it better. Let's have the portfolio feed us those best practices. And then what we did is two things. One, look for the commonality that people are going to see again and again that added a tremendous amount of value, and then we wrote it down. I mean, just to be blunt, it was not hard. So the best practices align with really every functional thing you can think of that creates value inside of a software company. And depending on the needs of each organization, what they're going to want to tap into is going to be different and unique. If you're like, hey, I just give you an example just to be more specific. If you're like, hey, I've got 6 sales folks and we've got this $3 billion TAM to go after, and we want to go after it, how do I cost effectively go to 40 salespeople? I've got line of sight on everything as CEO, but 40 means the org looks different, our selling cycle looks different, the data we look at looks different. What do we do? And so if you're making that leap, it's very easy to tap into the best practices to say, okay, of the hundreds of companies you've worked at before, what is a good model for thinking about that, if that is indeed your company's personal challenge? And then there's others which are, really hiring related, where, it's the lifeblood of all, it's elevator assets, right? It's, most of what we buy are, contracts, intellectual property, and the right to keep people employed, right, that are doing good work. And so we do a tremendous amount around recruiting, training, and that basically that people engine side of it. And so there's a lot that goes into that. And, even if you say the people engine, it's really 8 or 9 things that go into it that, in that case are probably half are going to be new to folks, because there's some specific IP that we use there that is different. But it is custom tailored, and it really just depends. And it's all common sense.
That is, for those who run companies, are you really trying to make decisions whether you expand or hire in? Are you facing that back some? Those who invest, have you tightened your investment?
On the business side, I think Elizabeth got it right. You can't time the cycles. And so we're just trying to create value, hire great people, build great products, sell them to customers. So I can't say that we have really tried to time cycles. I think that would be foolish, frankly, on our side. Yeah, impossible.
No, it's just really about execution in all areas, and just being the best we can. And then the valuation, we believe, takes care of itself if you do those things.
I mean, we look at investing in a similar principled manner. I don't set a threshold of, X multiple of X metric and say we can't invest beyond that because we think it's too high. I think there's, unique and distinct value to be found in just about every business that we look at. We certainly are more discerning when valuations start to get, a little bit more lofty. We require a little bit more just from a thesis perspective. But we haven't slowed capital deployment down, to answer your question. So we're at, the similar pace that we always have been. While valuations feel like they may be a little bit high, that doesn't change the way we approach finding value in businesses.
Yeah, we had a meeting, it was 3.5 years ago, actually, in Lincoln Hills, up near up in the mountains here at my boss's ranch. And we had a drag out argument over whether or not we were going to slow down our investment pace. And the conclusion we made was, we're in the business of putting the money to work for our LPs. Their target returns on a blended basis for our institutional investors is about 7 to 7.5%. And they're not achieving that. And so we were producing net IRRs in the mid 30s. And so our view was, we were doing right by them if we get it wrong and produce in the mid 20s or the mid teens. So, well, don't stop, right? And so we looked at that and said, okay, if we're not going to stop, because that was threshold 1, threshold 2 is how we're going to be careful, right? And the view there was, be thoughtful about what the key pillars of value creation and sustainability are, and make sure you don't stray from that. And then number 2, buy businesses that if you have to hold it for another year to make your return because the market pulls back, you're good. And that has been a great guiding principle. And our last 3 years have been our best 3 years in the whole firm. So thank God we had that conversation and that I lost.
So I heard you mention that sometimes it's a little hard to get C-level talent into the Denver market. And just as, kind of plug for what Tom Hickman's doing, are you guys familiar with 10-10-10 and the efforts that he's putting forth there to try to attract new C-level talent? Or what are other strategies that you think would be good to bring that type of talent into the area?
I'm not familiar with 10-10-10. Do you want to elaborate, or?
Don't keep us in suspense. Right?
So no, we're not doing that.
And kind of introduce them to the Denver area and the Colorado market, give them a lot of support to think about 10 different problems and come up with a solution or a path to a solution in 10 days. So it's basically a way to try to drag more CEOs into the area who then might be interested in sticking around. What else can we be doing as business owners, as investors, to help encourage the migration
dispensary at the airport.
We can't get off of that.
There are some themes starting.
Besides the dispensary at the airport, I think for us at Cherwell, what we want to do and hope we do is create a compelling opportunity for someone, especially at a C level with our growth opportunity. It's not going to work for everybody. It's not going to work for everybody with their families and certain situations, especially coming from the Valley. But we just recruited a chief marketing officer from the Valley who's moving here to Castle Rock. So excited about that. And he's going to be able to afford a really big place there in Castle Rock compared to where he's been. But for us, it's about the opportunity, and obviously the C-level talent that we want, are the people that need to be really fired up about what we're doing. So we hope we find that. Now we've had some where they commute, they didn't fully move their families, but they sacrifice and commute, and we've done that for some. But it's really about, we feel like we can get the right talent, the right fit with the compelling opportunity.
The only thing I'll say is, I think as a community, we just need to build and grow great companies, right? And we need to have a concentration of great companies that attract people from the coasts. Because as we said, there's so many other good reasons to be in Denver. So the lifestyle is a great attractor. There's many, many, many great attractors, but the more great companies we build or bring into the community. So Marketos are going to be of the world. They're going to create the new CEOs, and Vertifores are going to create the new CEOs. And, I think that's the self-fulfilling concept. So we keep, investing in the community, it will come. I did. You're right. I have an example.
I did too.
And actually, yeah, I'm a good example. You should use me as the poster child because I didn't know much about Denver. In fact, I landed in Denver from Europe. I was doing an expat assignment there, and I've been gone for 3 or 4 years. I'm like, oh, Denver, this is going to be great. I'm going to go. I mean, this cost of living is going to be nothing. It's like, and I landed in Denver and went house hunting, and I'm like, what happened to Denver in the last 4 years? But now, my family loves it, and they've told me that I can move anytime, but they're never moving again. So.
What is one space in software technology that you're really excited about, and one space that you think might be overhyped?
I'll quickly answer. The answer to both questions is machine learning.
Yeah. I mean, he stole it. I had the mic. I should have gone.
Great answer.
I think you hear all.
What industries for machine learning then? You all are going to say machine learning. What industries do you think it'll apply to and have the most impact?
All of them. I just listened to, we were having our big annual customer conference. Cherwell is down at the Broadmoor this week. So we had over 600 customers there, and our CTO stood up today and talked about, the vision for Cherwell in 2029 when his daughter, who's now 10, enters the workforce. And of course, we'll be innovating well before then, but things that she's going to expect. And machine learning, AI, we've got to be thinking, even in a software as kind of boring as IT service management, we have to be doing those things because that's what it's going to look very different in just a few years, and we have to be on the leading edge of that.
So for me, the best one in terms of long-term trend right now is security. I think the bad guys are out there innovating as fast as they can. The threats are growing. The interconnectivity only makes it worse. And we've got, today's a great example. We got Wi-Fi locks on your house giving out. It's a great question to ask, right? Like, how are you going to secure it? Like, okay, security is being embedded into that to make IoT work. Most IoT companies and devices it's an afterthought, but it needs to be their first thought. And our power grid is under amazing vulnerability, a lot due to both physical and cybersecurity. So I think there's a huge frontier there that is never ending because the bad guys are racing ahead.
We agree. Actually, across the board, I agree. I think on the cyber side, to your point, we are putting our money sort of in that space and where our mouth is. We just launched a $100 million venture fund in San Francisco, primarily focused on cybersecurity opportunities. So I think, that frontier we recognize very clearly as being, very important going forward for the reasons Alan mentioned. And when it comes to data, big data, and machine learning, I think so many people blend this whole thing together into one concept, and they think they know what they're talking about. Alan put it very articulately earlier about how much bullshit there is in that market. I think analytics and big data, et cetera, are going to be important parts of every enterprise software strategy, broadly speaking, enterprise or otherwise, whether it's consumer or enterprise, doesn't matter. Software is already kind of halfway through the sort of systems of systems of record to systems of engagement to systems of knowledge, and they're going to continue to move down that scale. You're not going to have everybody out there monetizing every bit of data that exists, and people that think they are, I think, largely speaking, are going to get lost in that fray. You'll always have some very high quality data players that are very good and very sophisticated about the way they monetize data, but generally speaking, it's going to be a big slushy pond.
Great. Well, thanks for everyone for sticking around for this, and I want to thank the panelists for taking the time with us.